I would like to introduce today Mr. Michael Ponte. Hello, Mr. Michael. How you been doing today?
I'm doing well, Jarek. How are you? Happy days today, eh?
Happy day. Every day above the ground is a happy day. That's what I feel like.
Absolutely.
We have to enjoy our life. Can we agree about that, right?
I agree 100%, buddy.
I would like to just introduce Mr. Michael to anyone who didn't have a chance or doesn't know much about this very good fellow of mine and friend of mine and very, very knowledgeable Canadian known real estate investor. So Mr. Michael, he's been running prosperity real estate investments since 2002. Is this right?
That's about correct, yes.
And you have multi-million dollars portfolio, multiple units, apartment buildings primarily. Did I miss anything?
No, we've also got a big residential real estate portfolio as well. So we've got houses and townhomes and lots of different things as well. But our focus these days are mostly multifamily apartment buildings. So yes.
Okay, perfect. So I think that information is up to the date. So Michael, what made you decide to start doing and working on the real estate side?
Yeah, that's a good question. I get asked that quite a bit myself. And then I think for a lot of people that are just getting started, it's probably a very similar story. And for me, it really started as I just wanted to own another piece of real estate. I had no intention of starting up a company or any of this stuff like that. I just wanted to own a property. And it really came to kind of a head for me back in, I think it was like 2001. And so for me, I was looking at kind of, we purchased our very first personal residence, our property, our main property. And then within that 1 year, it appreciated quite a bit. And I do remember going out in the driveway, and it was kind of I think it was like January or February, and I received my statement from my assessment, and it showed how much my value of my property has gone up. And then also, in the same breath, I was also looking at my returns that I had in my investment portfolio, be it RSPs and stuff. And I noticed that within 1 year, I made way more money in real estate than I did in the 10 years that I've been making in my RSP portfolio. And I'm like, wow, I need to do a little bit more of this and a lot less of this. And that really was kind of the eye opener for myself. And so, for me, I went out, did a lot of research, did a lot of reading, and trying to get my head wrapped around how to invest in real estate, and then kind of made the plunge and bought my very first investment property. And when I first got started, I didn't really know a lot about anything, to be honest with you. My first property was negative cash flow of about $40 a month. So it wasn't doing very well, but I justified it based on $40 a month. That's one evening meal I don't do once a month, and I own a property because of that. So and then it just kind of snowballed from there. And like I said, I started to buy 2, 3, 4, 5 properties, and then from that point forward, people were wondering, you own a portfolio of how many properties? And then people started getting interested in what I was doing, and then said, hey, you know what? I'm interested in what you're doing. Would you be wanting to partner up? And that's where it started to grow from there. And then it came to a realization. I think it was after I'm going to probably say my 10th or 11th property at that point in time. And I'm like, you know what, there's a business that's here. And that, I was kind of working full time with another company. And then I'm like, this is an opportunity here. And so we kind of we went for it, and then haven't really looked back since, and just kind of started to grow the business. And now we're running roughly over 215 units within our company, and it's been a roller coaster ride, lots of fun, lots of ups, lots of downs, but it's been a journey that I wouldn't change at all. So yeah.
So just to clarify it, what is the best, in your personal opinion, real estate investing strategy which you utilize on a regular basis?
The strategy itself, okay. For ourselves, our strategy is always kind of the same, be it residential or multifamily. And I'm a big believer, and I teach this as well, is you make most of your money on the buy. And so whenever we are in acquisition mode or we're looking for opportunities, we're looking for that situation where there is equity from the very, very beginning of the acquisition. And so we are, in a lot of cases, looking for those motivated sellers, people that are in some form of distress or some motivation at some point or another. Secondly, so there, number one, has to be an equity position from day one. Secondly, there has to be cash flow from day one as well. So we're not just looking for cash flow that we can increase down the road, but it has to be generating some sort of income from the very, very beginning. So those are kind of two main principles. Whenever we're looking at acquiring real estate, it has to have those two key fundamentals from the very, very beginning before we acquire any investment property. And part of it is to ensuring that we have equity from day one. It helps provide a cushion. So if the market is kind of here and we're buying here, if the market goes down, we're still in a positive position. And here's, if we look at what's happened in Alberta, specifically in Calgary and Edmonton, that has been our saving grace. We're heavily invested in both of those markets, and we've invested really low. But even with the recession that they're currently in at this point in time, we're still in a very positive position, still generating cash flow, and still have equity in each of our properties that we own. So
simply saying, it doesn't matter what kind of fluctuation of the market is, you should be still in the positive, investment strategy, and you are not making risky decisions. So it has to be firm investment strategy.
Exactly. Like I said, we don't buy unless it has at least those two main principles. And at the same time, we're looking at the exit strategy as well. And we're not just basing it on market appreciation. And, the reality is, specifically for some of our apartment buildings, we're working on a project right now where, it's going to be probably a 2-month window where we're renovating each and every single unit, raising a lot of the rents, improving the cap rates in our buildings. And then hopefully the market will start to see some improvement a little bit. But at the end of the day, we've done the work that's required to increase the valuation of the building. So regardless if the market goes up or not, we know that we've increased the value of that property. So, and like I said, we can take it out and sell it. So,
and doesn't matter even if it goes south, and you still have enough cushion to survive, and making sure that
exactly
for the real estate investors. Perfect.
Yeah.
So what can you just brag about yourself? Which is the best deal you ever made?
The best deal I've ever made. That's a good question. Actually, a good one. I've had a few really good ones. Does it have to be sold, or is it still
whatever? Yep.
Okay. Well, I'll share an apartment building that we purchased. I'm going to say probably one of my favorite deals that we acquired was an apartment building that we purchased back in 2011. Okay. So we bought this property. It was kind of a depression state shortly after the 2008 recession. And we were buying stuff at roughly $65 a door, and it was an apartment building that we purchased. So we got it for a phenomenal price. In fact, it was actually too low for the seller side of things, because they actually hired a residential realtor who didn't actually know what they were doing. So they undervalued the property. We bought it within hours of it actually being listed at full price because they didn't know, and they tried to get out of the deal. But the way we wrote out the contract, it was almost impossible to get out unless there was something substantial that was going to come up in the due diligence side. So, so that's kind of when we purchased the property. We did a lot of work on the building in itself. And so back, and then in 2016, just before the market started to kind of correct itself again, this is a property in Edmonton. We saw some issues going on in the marketplace. So we kind of made a decision with our investment partners at that point in time and said, listen, we can get into an equity position from the beginning, get into an equity position by refinancing this property at this point in time, and then refinance and then just get into an equity position. And so when we went to go to refinance the property, we kind of financed it at a very high valuation at about $118 a door. So it was a very short window. It was really only 4.5-5 years. And technically what had happened is when we refinanced it for the value that we got it for, the investors got paid out their entire initial investment back. So they still own the property today. We all own the property today, but they're in the property for $0 and are still generating cash flow from the properties today. So that's probably one of my favorite deals because we're still in it. and like I said, they're in it for literally nothing. They've got all their money back, which they've reinvested back in the market with our company, but they're generating cash flow from nothing in it. So
experience and knowledge. Yeah, cool for that, definitely.
Yeah, and that's one that we've got several of them, but that was one of my favorite ones. So it's always a nice, puts a smile on my face when you're giving back their money back and they still own the property. So it's pretty cool. Yeah.
And they are repetitive clients of yours, partners,
absolutely,
right?
Absolutely.
We will talk about that later on, right?
Sure.
So you mentioned about you working on one of the deal as we speak, right? Is this only one deal which you're working on it as we speak, or there's
no? I've got multiple things kind of we're working on behind the scenes at any given time. So we've got our team of realtors that are out in the markets and several different markets that we're interested in. And I get deals sent to me literally on a daily basis, to be really honest with you. But it's a very, very small percentage of deals that we're actually pursuing, and like it's got to fit our system in regards to the equity side and the cash flow side. Most of them are not fitting that model. The problem that we're facing is we're just not seeing as many motivated sellers as we once have in the past, and we'd love to be finding them, but unfortunately, it's kind of a needle in a haystack. But I'm a big believer that you don't settle at all. You make your money on the buy, and like I said before, and I can go buy a property tomorrow, but it's going to be the wrong property. I need to find the right property that's going to make not only our investors money, but as well myself. I'm in here to make money just like our clients are. And so it's all about trying to find the right deal that makes the most fundamental sense. And it's, patience is probably the most challenging part when it comes to the investing world, because a lot of people just get excited and they're anxious and they want to buy something, and then they buy something and they make huge mistakes. And all they have to do is just wait and be patient and find the right deal that makes the most fundamental sense. So.
Yes, patience. Patience. Yeah, the deal has to be right. Otherwise, you have a chance to lose your own money and your people, your investors' money too, right?
Absolutely. Yeah, absolutely.
So, can you tell me who's your perfect partner? Perfect partner in your real estate investing venture?
Like joint venture partner? Is that what you're asking, or?
Yeah, yes. Like who, if somebody would like to work with you, right? Who will be that kind of person?
Yeah, I can't really say I have a perfect person. I deal with most, all my investors. They're all very different from different types of fields. But I guess if I wanted to highlight maybe a couple key specifics for people that I like to work with, for me, I like people that are wanting to learn, that are interested. Because like I said, I'm a teacher. I love teaching this kind of stuff as well to people, and sharing the information and seeing the excitement that comes along with it. But at the end of the day, I guess some of the investors that I really like to look at, people that, number one, are serious. Secondly, are for us, for our minimum investment for any of our projects is somewhere in the area of around between $60,000 to up to $100,000 per share per module. So realistically, for people that if they've only got $25,000 or $30,000 and that's all the money they have, that wouldn't really work for us, because real estate is a long-term hold. It's not something that's going to be flipped within a year or two. So realistically, in a lot of cases, that money is going to be sitting for a few years, just being patient in regards to letting us do what we need to do to generate the returns that we're going to give them. But for us, it's really finding some good synergy with myself and them, so they have clarity to what our objectives are. So I guess for people, if I went to say the people that are probably some of the best investors that I work with are people that understand that this is going to take some time, and between a minimum of 3 to 5 years is kind of our time frame that we look at, with 5 years being kind of the average. But at the same time, for people that we don't want to work with, it's if they've got $100,000 and they're looking to make it into $1 million within 1 year. That's not going to happen, and it's not with us. And if you've got somebody that is able to do that, let me know, because I'd be happy to invest some of my own money with that as well. But so it is about being realistic to what the objectives are in the investments ends. And so we, as we kind of talk to new investors or people, it's kind of an interview process from both ends. People get to understand what our business model is, what we do, kind of our track record, all that wonderful stuff. But at the same time, we do a reverse kind of interview with them as well, and we're asking to find out a little bit about them, what their goals and objectives are, and even more importantly, do we see some synergies between both sides? Because again, you're kind of getting into a marriage for the next 3 to 5 years, so we want to make sure that it's going to be a happy marriage and that we're all on the same direction in regards to what we're trying to accomplish here. So
definitely, but if someone who has not a less than 60,000 do not feel that you are rejected, just reach out to us, and then we find the best strategy for anybody who is willing to work with our team, right? So
absolutely, there are lots of options, and like I said, if somebody's got $10,000 and that's all the money that they have, or $5,000. And it may not be somebody with myself, but definitely, be it with Jarek or even myself. I know other people that can work with them as well. And some people have got RSP capital that they are not necessarily happy with their returns. There's lots of options to get involved in the real estate market using RSP capital as well. And it's just being open to different options and suggestions and stuff like that. And like I said, it's just get involved. And like I said, if it's not myself, then there's always lots of other people that be happy to work with you as well that we can recommend. So,
and you do not know what you don't know, right? So
absolutely, yeah, absolutely.
Yeah, you have to have just respectfully balls to take an action.
Absolutely, yeah.
Okay, so let's go to the more kind of conversation about challenges which you are facing on a regular basis, Michael. We presented you as a successful real estate investor. However, I believe that everybody has challenges on regular basis. Do you have those kind of challenges while real estate? And can you elaborate more what kind of challenges you are facing?
Sure, absolutely. This year has been probably the most challenging year that we've as a company has ever had. And partly, our biggest challenge right now, I should say for 2018, was due to a large recession that we're dealing with in Alberta. And again, like I was referencing before, we're very heavily invested in the markets or in segments that are oil and gas based, be it in Fort St. John, be it in Edmonton and Calgary. And when it came to challenges, the biggest challenge that we faced was vacancies. And I can say, in all the years that we've been doing this, so since 2002, so the last 16 years, we've never had vacancies like we had, I would say, for the first 5-6 months of this coming year. And it was very, very, very challenging. So, part of our system and our protocol that we have with our management companies that we work with is we're not willing just to put anybody into our properties. So there's a major screening process that we get involved with, and we're a big believer that we'd rather let it sit vacant than having the wrong people in the properties to begin with. So finding quality individuals to rent our properties was very, very limited. So there's a lot of times, as an average, 30, 60, in some cases even 90 days vacancy was not uncommon. And to kind of add insult to injury, to be honest with you, there was so much inventory in the marketplace for rental properties that you had to actually spend money during a time when there's high vacancy to, repaint, put new flooring in, new kitchens, new bathrooms, spruce it up to make it appealing to your prospective tenant. And so to us, that was always kind of that was where a lot of the biggest hits were coming in this coming year. And so, not only was there no income coming in for, be it a 30, 60, 90 day period, we're also spending money in regards to doing renovations and work to try to provide the vacancy. So, our company's kind of, if I went in to look at one key word for our organization this year, starting at the beginning of this year, the key word was stability. And so our goal this year was to continue to try different advertising methods, trying to work with try to do other unique ways to find those quality tenants to bring down those vacancy rates. But at the same time, we spent the money in the right areas to ensure that the quality always stayed high to attract those quality tenants. There was a lot of competition out there that was offering, free utilities, free month's rent, free all sorts of different things to attract tenants, but in a lot of cases, or even reduced rent. But at the same time, they were really attracting some really undesirables in a lot of cases. So we didn't fall for that. We always stayed with the quality end, and we know that we've got more of a long-term quality tenant in the long term. So I'm happy to say, like, when we first started this year, we were pushing somewhere close to around 11 to 12% vacancy, which is very, very high. I haven't seen anything like that today. And as of yesterday, just got confirmation, we're now pushing somewhere in the area of around 3%. So the work that we had put in place, a lot of new systems in regards to attracting the quality tenants, had really, really worked. We started kind of a new platform called Renters Online. So it's a company that we just started off as well. So for people that are having challenges trying to fill vacancies, we're creating kind of more of a social media platform to help attract people through Facebook and Twitter and Instagram. And right now that's making up roughly around 95% of the leads that we're getting on our properties. And so it's been a really phenomenal success. And like I said, I still hear a lot of people still dealing with that kind of 8 to 10 to 11% vacancy. So we've been very, very fortunate to get it to as low as we have had. And best part about it is it's quality tenants. So that's been a really challenging, but at the same time, quite exciting process that we've had this last year. So
to whoever is a landlord, do not fill up with the, people which are, not so screened, not well. Yeah. You didn't screen them well, and then because within short period of the time they may become professional tenants, right? So it's better to wait 1 month, 2 months, even longer, in order to have a quality tenant who will be living in that property for years to come, right? That's the goal.
Exactly. Well, you bring these individuals in, unfortunately, and it's not only so much the rent that you're missing, it's the damage that they can do to the property, which circumvents any income that you could have provided. And so, we've been, knock on wood, we've been very, very fortunate. But at the same time, it's like I said, it's part of the screening process at the very beginning. And I know a lot of people have been struggling a lot this last year in those particular markets. And that really just been filling up with anybody. And there's some pretty bad horror stories out there. And so, like I said, sometimes it sucks that you're not getting rent for that maybe 1 month, but it's better than what can happen just by bringing the wrong people in there.
So you covered, Michael, some part of the marketing in order to gather and get good quality tenants. I would like to ask you about how do you market yourself as a company, right? What kind of marketing strategies you are using to generate quality leads and, to get quality, deals happening, coming through your pipe?
Yeah, I think for myself, I guess from the real estate side of things, from new acquisitions, it's talking to lots of people. And like I said, we've got a lot of real great realtors that are doing a lot of networking on our behalf in a lot of cases to finding deals. So they're feet on the street. They're meeting up with a lot of owners, and they're saying, hey, I've got this individual, this company that we're working with that is looking to acquire properties. Would you be interested in selling? So with them, they're providing deals that are never necessarily available on the market whatsoever. These are private, quiet deals that we're working with. And in most cases, that's really where we find some of the best opportunities. Secondly, it's just a lot of networking with lots of other investors and lots of different people. It's like I said, even though we've this last year, specifically in Alberta, have been a significant challenge, it's also been huge opportunities as well, where people that are feeling a lot of pain, dealing with significant vacancy, just need to get out. And so it's just they come to us and we're like, hey, would you be interested in buying our building? let's take a look at it. Let's go through the due diligence process and see what we can kind of come up with. But again, it's part of it is just having those relationships and those individuals that we are constantly working with. So it's, from a deal perspective, those are some of the key strategies that we work with. Is we're always touching base with be it our mortgage brokers, be it our realtors. One of the best resources that we use constantly is even our property managers. Our existing property managers that we work with, they'll know the buildings inside and out because they're already managing them, but they've already been talking to a lot of these existing owners and they know what's good, bad, and ugly about these buildings. And there's opportunities that are there. And all he says is, hey, I've got somebody that might be interested in buying your building if you're looking to sell. And these are just quiet deals. And the best part about it is these management companies that we're working with already are managing them. They just may not have the right capital to do the work that needs to be done, and that's where we kind of come in. And then, so that's kind of from a deal acquisition perspective. And then I guess from a joint venture perspective, joint venture capital, it's been we've been very, very fortunate that we don't need to do a lot of marketing to find it. Our business has really been a referral-based business. We've been doing this a very, very long time. So a lot of our existing partners are recommending us. And so that, based on that, we're getting a lot of leads and referrals. And again, we're looking for a specific client base in regards to finding the right people to help to go into some of our acquisitions. So it's been very, very fortunate. The one thing that we will be launching as of next year, we are kind of doing more of an online kind of platform called Savvy Investors. And so we're going to be hosting a lot of new webinars and Facebook Live and all that kind of stuff like that. That's going to be coming on board. So it's now going to be available there. And that's something that we're doing just to help also generate more attention, more leads to us as well from it comes to be it joint venture partnerships or whatever the case may be. So that's going to be all coming out in 2019. So
that's definitely something to consider. However, the primary message is word of mouth is the most powerful system and marketing. So because somebody else marketing on your behalf, right? You do not have to sell yourself. Everybody else selling you as a go-to, solution on a real estate side. So I envy you for that. You have achieved the goal every company should be working towards, right? And, creating that savvy investor and doing the presentations is just to build the recognition and expanding your network. So my question comes to mind, where do you see in yourself and your company in the near future?
So in the near future, it's going to be quite interesting. I think 2019 is going to be, I was talking about the one key word last year was stabilization. So that was kind of our key word that we used for our company, and it worked very, very well. So we have now done a lot in regards to delegating a lot of those tasks to have the machine kind of running on its own to continue with the stabilization side. And I'm going to say 2019, the one key word is going to be growth. I see a lot of huge, really good opportunities this coming year. And for us, we are going to be in full acquisition mode, big time. So kind of our target that we're looking at for this coming year is, we're hoping to be kind of roughly between 8 to 10 properties this coming year, depending on the projects that are going to be coming our way. But like I said, we're anticipating for at least the next 2 years going to be some pretty significant growth from an acquisition perspective. And when I also say growth, we're looking at lots of different ways to be creative in regards to increasing a lot of our income, keeping our expenses down as well, and just looking at growth in all facets within our business in itself, be it more cash flow, reduced expenses, definitely more acquisition. And at the same time, making sure that our vacancies stay kind of at an all-time market low. And that's going to be kind of our key driver for this coming year. And it is going to be growth for this, definitely for 2019, big growth. I'm anticipating for both 2019 and 2020 are going to be some pretty big years for our company for sure. So
something to consider. And further, $100 million portfolio.
100 million, that may be a little excessive, buddy.
Okay.
I couldn't even tell you what the number is going to look like. Next year, ask me the same question, same time, and we'll tell you what the number ended up at.
I'll do.
Write it down.
that. I will do that. I will do that. So, to anyone who is listening and this presentation and conversation, do you have any suggestions for anybody who is thinking about real estate investing, partnering with you, doing whatever you've been doing? Any suggestion from your own perspective?
Yeah, I think getting started, I think just to begin with, regardless if you're working with our company, another company, or somebody else, my first recommendation is get some knowledge, get some information, understand what is it you're trying to do when it comes to the investing world. So if you're looking to do it on your own, my first recommendation is get trained, get educated first and foremost, be it taking some coaching program or mentoring program or something of that nature, for the cost of whatever a program costs, at a reasonable price. You see programs for 20 grand, which I think is insane, but for a reasonable cost, take the time to learn, because that small expense is marginal compared to the cost of the mistakes that you can make by not learning first and foremost. So that's kind of my first recommendation for those that are just about to get started. Take some time to learn, be it 3, 4, 5 months, even a year if that's the case may be, but just get yourself settled right off the bat. Have a good network of people, talk to individuals. So if you're looking for something specific, speaking with Jarek or myself, I'm always an open door as well. So you can always ask me questions. Learn before you start to proceed. And then for those that are looking to partner up with somebody, be it our company like myself or somebody else, my recommendation for anybody is making sure that you guys are both in alignment of what it is you guys are both trying to accomplish. Our company has clear, specific goals that we're trying to accomplish. And for us, we're looking for people that have very similar objectives within their investments as well. And I can tell you there's lots of times that we turn down a lot of joint venture partners just because we're just not in alignment. And it's not a bad thing. It's just that it's a different thing. And, some people are looking for something completely different than what we're able to accomplish or do, or just doesn't fit. And that's okay. There's nothing wrong with that. I can always recommend them to somebody else. But for the people that I'm looking for, and then vice versa, the people are looking for myself, is we've got to be kind of going through the same path together. And again, I always reference it similar to a marriage. You guys are all got to be going down the same path mutually together with the same understanding of what you guys are trying to accomplish. And so when you are looking for people, make sure that they're credible, number one, and secondly, that their goals fit exactly what you're trying to accomplish as well. And I can't enforce that one enough. Get a chance to talk to lots of different people, and when you feel comfortable, that you're willing to give up your money to proceed with that person, then that'll make you feel much better with your investments, for sure. So.
Perfect. Thank you very much, because that aligns exactly what I feel all the time. You have to move your butt and you have to take an action, right?
Mm-hmm.
But you have to keep asking. Simple as that. Like what I should do, how that can be done. I have that much money, or I have those resources which I can utilize it. Help me to be successful. And that's one of the things which is desired for any real estate investor, right? So that's one of the things which I do really like what you mentioned, and thank you for that, right? So
no problem. Yeah, no, it's like I said, it's a journey for anybody that's getting started. It's not always roses and sunshine and all that wonderful stuff, but at the same time, if you go there with a long-term perspective, like I said, positive things will happen. It's just needing to be able to be managing it properly and well. And that's where, the knowledge and the education needs to come in, be it you getting educated and learning how to do that yourself, or your investment partner that you're working with has the knowledge and expertise to do exactly those things to help ensure that your investments are safe. So,
but if you don't know, just keep asking. Simple.
Agreed.
So, aside of the real estate investing community, which you are a member for many years, Michael, how they can reach out to anybody who is interested to work with you, how they can reach out to you?
Yeah, I see the slide that's come up here as well, just right now. So thank you. That's my direct email line. So you're always more than welcome to just shoot me off a quick email, or just give me a call as well. So anytime you want to reach out to me, I'm available quite frequently. And sometimes the best thing to do is if you shoot me off an email, I'll try to schedule either a FaceTime call or a Skype call or some sort, and be more than happy to discuss anything that you guys need to do, and just scheduling a time and an appointment there. And if you even just leave me a voice message or give me a call, more than happy to answer any questions that you guys have.
So the email is mponte@prosperityinvestments.ca and 604-518-0662, right?
You got it, sir.
Perfect. So I would like to thank you, Michael. I'm looking forward to working with you on the real estate investing side and doing the presentations with you. Savvy Investors is an exciting idea, and I would be very, very happy to work with you on any aspect of that, right? And I would like to reconfirm anybody who are listening, watching these presentations and getting involved, take an action, guys. Don't talk about doing the stuff, start doing, doesn't matter what. And if you keep asking, you will get an answer from Michael, from myself, or anybody else involved in our community. So thank you very much, Michael.
You're welcome. Thanks, Jarek, for the opportunity, and hope everybody does well in their investment journey here. So